Good afternoon, good afternoon, good afternoon, good afternoon. Okay, this is your host, Ian Adegura from Price Action and Traders. Yeah, let's go straight to the points. We want to tell you about the Malaysian SNR levels, the storyline behind the SNR level, the storyline behind the support and resistance level. The storyline means the price action behavior, in all the time frame. Every time frame has its own storyline, and within each time frame lies a fractal, because price action is fractal, which within each time frame lies a structure. So that means within a higher time frame, there must be an intraday or a lower time frame storyline. But mind you, have this behind your mind that every candlestick in the market has a story, has its own story. Every candle, you must monitor every candle formation in the market. That's price action. That is pure price action. So every the high and close of the market, the high, low, open, high, low, close of the market is a story behind every candlestick formation. So we start with this is what we call the multi-time frame analysis. When you come to the market, the first thing you must do is to identify the storyline behind each structure you want to trade, or each time frame you want to trade. So what do we mean by multi-time frame? So multi means more than one. Multi-time frame. Why we say multi-time frame analysis? Multi-time frame analysis. So you must have to see this MTF. So that means time. Time is equals monthly equals that means more than one. Then we have a second. This is time. This is time. This means the dimension of each structure, or we call it the trend. The trend. Dimension of each structure, or the trend. Then frame. Frame means the borderline. Borderline or the limitation. The borderline limitation, that you want to look at. So that's what we mean by multi-time frame. You must have been seeing that in your Malaysian SNR videos. You want to get so MTF, that's multi-time frame analysis. Yeah, so that means if the monthly, weekly, daily, from monthly down to 5 minutes has its own storyline. So you must be able to check each time frame to know where lies the dimension of the trend, and the borderlines, the levels, because there are obstacles, there are borders, there are obstacles within each time frame. If you are identifying your market structure in a longer time frame, you must go down within the higher time frame. There are borderlines in created by the lower time frames. So you enter a trade, you don't want to see, you want to see, it helps you to look into where there's a possible, next hit by the action, by price action, where it's possible level of barriers or borderline that the price will only want to touch. So it helps you to see this in view, the direction in view. So for example, if you have this candlestick as a monthly time frame, have this as monthly time frame, this candlestick. So that means in this candlestick as a whole, this candlestick as a whole, you must see a borderline of daily like this. You'll see borderline of daily like this. So here, that means here is going to be the borderline, because that means here is going to be the borderline. Yeah. So if you got this in your as a monthly candle, bullish candle. So if you go to a daily time frame, you likely go to see this. So this resistance will be the borderline in daily time frame. You see this structure. So that means the price will likely go to come down to this place or be higher. So that's a borderline. That's a daily, you see daily borderline. Storyline, daily. Daily obstacles. There's daily obstacle, which is the resistance. Daily obstacle or border. Daily obstacle or borderline. So this is a weekly, this is a monthly, this is your monthly, sorry, this is a weekly, because the monthly is normally just after, let's start with the weekly, so that it will be to be a kind of a this. So if this is your weekly candlestick, a bullish candlestick, the storyline behind this is the storyline, right? You have this as your this. That means in a daily time frame, you normally go to see this. So that means this price has got to the resistance level. Let's try to go to either reject it or break through it. So what do you want to see in this place is that once you get your, when you get your this like this, so that means in this place you could likely go to see this is your SNR, right? This is your SNR, daily SNR. Daily SNR. So this place you likely go to get your confirmation will be, your confirmation is going to be a daily price rejection candlestick of the let me put it here. You want to see a confirmation like this. A confirmation like this. So color doesn't matter. A confirmation like this, that is here, right? You likely go on to see this. Likely go to see. So this is just to give you confirmation. This is what we call a daily. This is a daily rejection candlestick in a daily. Then in a 4 hours time, in 4 hours time frame, you want to see something like this. You want to see something like this, a breakout, a breakout, a breakout. Hmm? A breakout. So this is a breakout of this SNR. Breakout. A breakout of an SNR. So that means your push will be, I mean your focus growth be here. Yeah, a kind of going to see the next is in that bounces off it. What is something like this? Yeah. So you want to see a path rejection of this when price retests after the retest. Yeah. When price come from this up from the breakout, you want to see this. You want to see this as a retest in 4 hours. So if you go lower to if you go lower to 1 hour, actually go to see this before you finally get to like this, or something like this. So there are four, we have to see about 4 candles here. So these are borderlines. These are borderlines. Proprietaries. The borderline, the intraday, the internal, we call it internal, internal obstacles within the higher time frame. Yeah. So that means for 15 minutes, before you go to this place, you must have gotten a long pullback, with the internal stuff. So that means in your this thing, must have got something like this. Like that. Yeah. So that is how you listen to stretch out. So that's why you need to lay out your multi-timeframe analysis to really know where there's going to be a possible barrier, within the choosing higher time frame. Hmm? Yeah. Really a possible higher time frame. So because the weekly is considered to be the father, while the daily the mother, then the H4, which is the 4 hours, happens to be the firstborn, the rest of them considered to be according to the Malaysians. So the intradays are considered to be the same days. Yeah. So that means the whatever that happens that will happen in the intradays, most has been determined by the weekly. So what I mean determined by the weekly. Let's go to the chart and see how do you tell this. For example, this is the daily chart. So if we go weekly, the daily chart. Let me. This is a daily chart. You can see right now. This is price has been price. This is the internal high, internal low, right? The internal high, internal low, breaking out. It's a breakout here. Internal high, internal low. There's breakout there, and there is this internal low. So price has broken out of the distance. So that's the structure. That is the structure. You can see the distance with the SMC concept. Yeah, that is structure. This becomes a stronger distance now, right? Now you can see that before here, what do you look to your left when you come to a structure like this? This is a weekly structure. You look to your left. This place to the left must have gotten a where this is reacting from. You look to your left, there must be an action here. That is that you are getting reaction here to a particular action in the past, where you look up to the past and draw this out. See this. This is the open close. Now when you have this, it does not touch that. So probably it could be this. Have this. Have this. Oh, let me use my arrow. Let me use my arrow. You look to your left to see where it is possible this is reacting to possible level that is getting a reaction here in the present time. I see that down. So that means you must have done this before this price. You must have done this. You must have pull out your whatever, you know. You must have pull out all this SNR level before before you got here. You must have pull out all the available SNR in the past that the prices grow react to. This is the job. Touched, broken through, touch, fresh. Yeah. So at each level of this thing here, you can see price will react. If you go to, if we take this down to daily charts, see at each level here, there will be a reaction. So likely going to be here where that this thing is coming from. This place have another in 4 hours. Imagine 4 hours have a this is 4 hours. Imagine so you have this price. We will remove this. We will remove this so that it will not confuse us. We will remove this because that has been passed. It has been hit in the past. So you don't need them anymore. So you can see where the price is, where the reaction is coming from. It's coming from the these 4 hours stuff, 4 hours, 4 hours, 4 hour SNR. It's long. Oh, it's long. It's really long. 4 hours SNR, which is classical SNR. It's coming for 4 hours. This is the daily stuff. So you can see the obstacle above the daily, this daily stuff. This daily stuff. You can see in the past we have this passive button. Take it to, if you take it to weekly and see it. So we see if this, that's the 4 hours. And because it's hidden here, it's hidden in this place. It's hidden. This is a hidden base. So we got it on 4 hours. Got a clear figure of 4 hours. So that you see the necessity, the necessity of multi-time frame, doing your multi-time frame. So you must know for every action there is a reaction. So for every action in the past, there's going to be a future reaction. You must know where this thing is coming from. You know where this rejection is like coming from. You understand? So as we switch over to this thing, because if you put your this in here, you know, it's never got there. You know, but because we moved to 4 hours and we saw this in there, yeah, we saw the SNR, which the price places, which this price is reacting from. That's reacting from. So then it has, because it has hit this in the past, this daily or open close in the past, then it never got to this one. It's likely going to be there, in the future. So go to daily, move to daily. That's your weekly. That means your weekly this thing is what is still bullish, but there's a reaction, you know, from 4 hours obstacles. You know, there's a reaction from 4 hours obstacles. We call this a 4 hour obstacle as an obstacle. Yeah, obstacles. For our obstacle. So price try to reacting from there. If you measure that many pips, no, but that many points, it has come down to almost about there to this place, almost about there. Was about 192, thereabouts, 192 points. 192 points reaction. So one day you got that. What do you do? What do you do? What do you do? Probably you go to, let's go to okay, that's 4 hours. Yeah, you can see, so see level of touch that's been in the past. So that place becomes more significant job for price to react, because it has been a strong level in the past, a very strong level in the past. Yeah. So now it's right. This place is trying to react to this. It's trying to react to this 4 hours obstacle here. Mm -hmm. for our obstacles, and there was a reaction upward, almost about 76 points upward. But it is 4 hours rejection, right? Try to react to it and come down again. This will be a zone. This is your 4 hour zone. So we'll be trading from this 4 hour zone. So this will be your trade points, 4 hour zone. So price react from that low, then higher. So the this is bullish. So we have weekly bullish, we have a daily bullish sentiment. Then 4 hours to it's bullish. Because we have a zone here. This is can come to it. We have a rejection here. So all these are still rejection. We expect price to the next obstacle. Yeah, the next obstacle will be your target, profit target. So your profit target. So you go, if you want to and you can go lower 1 minute. So that's how this thing is. So you can see if you go to 1 hour. Hour, see it here. See hour in what happened in the past. Hour. So under 1 hour, you can see price reacted here to this SNR. So breakdown reacted again, then a breakout. Then after the breakout, a retest of it. We have a retest of it here. Then price moves higher. Price moves higher. In that retest, we got a rejection here in 4 hours. So that is one thing I want to let you know. If you are trading in higher time frame and you want to maintain a low risk thing, you must get your higher time frame rejection candle. Your higher time frame rejection candle like this. If you have your POI, just your higher time frame will serve as a POI. Higher time frame PO, a point of interest, which is the SNR level. SNR. So you must see, I told you must see something like this. You want to see something like this for you to sell. See something like this. So if this is your daily or weekly SNR, this is your weekly SNR. So this serves as your higher time frame point of interest. So once price tap into the POI and you got a rejection of the POI, what do? You don't waste any time anymore. Don't waste time anymore. So like what happened here in 1 hour, if you are a scalper, according to your decision, if you are a scalper, so you quickly you are actually going to use this as your setup signal. So intraday reject the intraday SNR as your point of signal. This is your thing here, and it was rejected. Then what a kind of bounces you have after the rejection. What is up? Rejection. So you will put your stop loss below this level, not below this lower low. This rejection block, below this rejection block, or put it here, or for a moderate, this is once you got a close above it, it must close above it. That is the rules. That is the rules we got from the Malaysian traders. It must close above it. We'll go to that in next this about setup and entry. Your setup and entry. So just for to do how to do your analysis your multi-time frame analysis with MTF, how to read the storyline in your SNR level. So next we'll talk about the setup, how to identify setup, then your entry point. This is a setup. Your entry point go to 50 minutes to see something like this. So same pattern, something like this. Then locate a kind of, you can locate a fair gap or you return to this place will give you the bounce. So this will be your entry point. That will be your entry point. Yeah. So we'll go next to our design. So like if you want to go lower, you can still go to 15 minutes, or but if you are the conservative type, you still want to go lower to like 15 minutes, 30 minutes. See all that's so it's moving higher now. It's reacting to this here. Price is reacting to. So you can see this level of this here. See, tap into it. There was a breakout here. It tapped into it, you know, it tests after this breakout. And you see that after this breakout, it's a breakout of open and close. Then price tap into it. So your own is to wait for a rejection of a particular SNR. You don't just enter. That's that when you have not confirmed a touch. You must confirm a touch with a shadow. Yeah, the shadow. So this is a breakout. Then a touch of it after the breakout. The shadow gives you good entry point for buy. So be your stop loss there. When you confirm this, that the close above it, can you see no candlestick close below the SNR level. So it's a good confirmation there. You want to see a movement from here down, then this is the action from this place, the action here, then move down, the acting up, try to create a bullish structure upward. Yeah, push up upward. So that's what we are likely going to see. Go to 4 hours. So I told you the next distinct obstacle will be your. So price is likely come into this place. Yeah, it's 4 hours. The fresh level. All these are fresh level. That's how to mark your DC. Mark them out. Mark them out. Mark them out. Each that is important. Don't ignore each SNR level. It's important. Don't ignore them. So want to see the move to this zone, then you can take another action there. That to buy the sell. And imagine how many points you got from this rejection here. And you see the rejection. So this is once you got this in 4 hours. Once you got this rejection, after this breakout of this SNR level, then power price moved back into it. Then was withdrawn back upward with a close above the SNR level. So that gives you a good setup. This place gives good setup. Good setup. A good setup. This place gives you a good setup. So what you just need to do is just to go to a lower time frame, and you want to see your entries pattern of this. The entry pattern is then by here. But for the zone, particular zone and the mandatory part back from there. This is what this is a fair value gap. If you are familiar with fair value gap, you have gotten this as an advantage. what is the advantage? Fair value that probably still want to use your AC at 70.5 in this zone to OTE of your stuff. So price coming down to this place, probably come here at last. So at each level there, you're going to get your reaction there. So that's the storyline, a quick storyline to this, you know. So let's talk. We'll look at the setup and the first setup and this. Then in each, let's look at okay, maybe we'll do that next time.